It's Thursday, and you tuned into MyStockScanner Live. We are going to go through the markets and spotting opportunities before the week closes. And we are Liam Flavel and Hans Henrik Nielsen, the men with the answers, and Jesper Behrens, I'm the man with the question. And we're happy to take your question as well. Just send us an email, fomo@mystockscanner.com. Hans Henrik, no doubt, yesterday was the event of the week. I'm sure it drew more audience than the Oscars normally do. Our good friend, Fed Chairman Jeremy Powell, took the stage and told us what we already knew. No surprises, or what?
Absolutely. He's looking at MyStockScanner every day, I think. He said exactly what we predicted.
And of course, we will dive into it a little bit more than that, because he had a little surprise up his sleeve. Liam, if I ask you if you want a Guinness,
yes,
because of your nationality. Because of your nationality, I know the answer to that question. But Guinness, one thing is, of course, getting the beer, but another thing is buying the stock. Difference to you?
We'll have a look at that. Yes, definitely. It's a bit of a falling knife at the moment. Wouldn't actually buy it right now.
Okay. Naturally, we will be talking much more about Guinness and the Fed and rate cuts, because what does it actually mean to us? I'm not talking to Guinness here, I'm talking to Feds in regard, because what does it mean to us here in Denmark? And we have a packed show for you. A couple of earnings releases from Oracle and AeroVironment that made waves across the border in Sweden. CLAS also took a hit, a 16% drop, and crypto is falling again. It seems like the risk appetite might have been satisfied. A few solid analyst comments pushed NOVO and VESTAS higher yesterday. Can they hold it today? I look up at my screen and say, yes, it can. But we'll talk more about that in a second. And as it is Thursday, we have Thursday Tech. Liam Flavel will take us to news about Nintendo, SK Hynix, amongst others. And as said, we will be serving Guinness. Number of today is also something that we have on the menu, $2.8 billion. If you watch the show in Danish, you know what it's all about. If you haven't, we have a surprise for you. And, it's good to have fans around, as much as that I can say. This guy also has fans all over the world. He's calm, he's cool as a cucumber. And he went and took the stage yesterday and gave us the Fed decision that we knew. There was three in disagreement of the rate cut of 0.25%. Two wanted no cuts, and of course, Mirren wanted 0.5%. No surprise there, Hans Henrik.
Absolutely. The 0.25% cut was communicated out a long time in advance. As we said yesterday, we were not that interested in the interest cut itself. There we go. We were more interested in what Powell he actually said afterwards. Our guess was that we know that they cut the rates. We can see they did that here under Biden. Then they have done it here under Trump. So no news there. What we were really interested in was what he said about liquidity, because banks have lacked liquidity lately. And we were a bit, our guess was that he would start pumping out liquidity maybe in Q1 next year. But the surprise was that they are starting tomorrow. They're starting buying up bonds from the banks at a rate of $40 billion a month, temporary, as they say.
What does that mean, Hans Henrik, in that regards? What does that mean to the stock markets?
That's a good question, because what really drives the stock market is liquidity. It's money. When liquidity is low, there's not as much money to buy stocks with. Here we see what is called the Fed balance sheet, and that means the amount of money they have bought bonds for. Every time they buy a bond, they give a bank some money. And that means that is liquidity that can run out into the system. What they had to do after the COVID stimulus packages, where inflation went through the roof, was that they had to cut down the liquidity, meaning that they were selling bonds to the bank and taking liquidity out. Now that has stalled, and my guess was they would start sometimes next year to pump money out into the system. But as I said, they start tomorrow. And in short version, that means there are more money available in the system. They need to live somewhere, and they normally live in the stock market. So this is good news for stocks.
But Hans Henrik, I'm gonna play you a curveball here, because the thing is that we're seeing Bitcoin dropping a little bit, and I thought that Bitcoins and crypto in general were good when risk money was out there, and 40 billion. I mean, some of them have to be risk money.
Yes, but there was another news yesterday, and that was because you're completely right. Bitcoin, Ethereum have become a risk-on, risk-off meter kind of thing. There are some structural things in crypto right now that might break, might not break, but there is one thing here. The thing that brought it down, we're going to address later in this show, and that is Oracle, that came out and made the market a bit nervous about growth expectations in the entire AI sector. And that nervousness, that is my opinion at least, is what's spreading into crypto.
Let's do it right away then, because you said it. Oracle came out with numbers yesterday, and that was not a pretty sight. The line is pretty much drawn up in this little video here. AVAV also came out with numbers. Oracle down 11.7%. AVAV down with 12.85%. Liam. Ouch.
Yes, yeah, it was actually the numbers from Oracle weren't too bad. Their data center sales grew 68%, which on the face of it looks brilliant, but the analysts are expecting 70 to 75%. So, and they're looking at the debt that the company's taking on to actually service this data center requirement that they've got. So they're looking at it saying, you're not growing as fast as we thought. There's still a big question mark over how you're going to pay and make money on this. And companies like OpenAI, they're pledging $300 billion of income into the data centers for Oracle. And everyone's saying, well, where the hell is OpenAI going to get that money as well? So there's a lot of question marks at the moment, and that is why Oracle dropped. Are they a good company? They're a high quality company. The big thing yesterday as well that came out of the results is that they will be dropping into negative free cash flow next year. And I think they're probably going to do it this year as well. So we just look at the summary very quickly. This is a representation of the last 6 years of actual results, and then the next couple of years going forward as well. If we just go down, we can see sort of all the data that we normally just put into the playbook dashboard that we've got. But we can see here free cash flow is actually turning negative this year, and is down -4.5%. Compared to a positive for the last 6 years. So they're actually burning through cash quite quickly, and that's really what the market didn't like. So from a valuation point of view, they've got a 110% upside according to our list, but the downside, into next year is probably not that bad either. But they are a falling knife at the moment. So if we look at Oracle, we can see it's dropped below its 50-day moving average. We sold around here because we dropped below the 50-day. We were gutted to miss out on this, but actually we're up on the deal now. So we sold the beginning of September, I think. With AeroVironment, they disappointed. The earnings came out; they were 43% down below what the analysts expected on earnings, and the market just decided, we don't really like you. From our point of view, it's not a particularly high quality company. It makes drones for the US government. They're having problems digesting a company they bought this year, but analysts think next year is going to be pretty good. So it's not all dire for the stock. They just missed an earnings, and that always gets punished. One company I love to hate is Adobe.
Because the thing was that since we're doing a triple whammy here, if we take Adobe, the thing was that they came out with stellar numbers yesterday, and in aftermarket down 0.8%.
Yeah,
there you go.
I think what happened was the market looked at them and said, that's a tech company that's making profits. We don't know how to deal with that in the market, therefore we'll send it down. If you look at it very, very quickly, everything's green on our first point, which is this a quality company? It's got 100 quality score. The EPS is going up through the roof in these golden sort of future areas. The PEG ratio, which is how much of that is baked into the price, is great as well for us because it's quite low. From a valuation point of view, it's very undervalued. You can see there's potentially 85% upside on there, and it looks to be bouncing at the moment as well. So it's maybe not a bad time. From a pure technical point of view, it's actually above its 50. I'd suggest we go up here and then test the 200 again, the black line, before we'd even think about it. I have never made money on Adobe. I've traded it 20 times over the last 10 years. So
I'm
do the opposite of what I do.
Exactly. I have the smell of burned Irish fingers in here somewhere, and we'll have to get past that if we ever go into Adobe. We just received an email from Louise who wants to know something about Meta. I'll see if we can press it in when we get down to Thursday Tech, which is later in the show. Right now, we're going to take a swing around Denmark, and we're going to take the swing with the Vestas windmill. Hans Henrik, finally some good news from, not finally, because they've been stellar lately, and yesterday was no different. Analytics came out and said, "Man, it's too low. They should go higher."
Yeah, and it was actually Goldman Sachs that came out saying that they thought a stock like Vestas should definitely be considered in many portfolios. If we look at it quickly, Vestas, it's actually a good company, and they were somewhat beaten down due to Trump and his entire policies around green tech and so on. Also a bit dragged down by the entire Ørsted reputation. If we look at the value chart, one of the reasons why we haven't got into it is that in this value chart, it is fairly high. It doesn't matter. It doesn't mean that there's not upside. There could easily be, but we like it to dive a bit down into this, what we call the value or the PE channel here. Dive a bit down here. That gives us a lot more upside and margin of safety. But it is a good testament to how much power these big analysts have. When they say we should up the target here, people just tend to follow.
Yeah, and it was also the finance house Kepler Chevreux that came out yesterday and gave them a little push. In that sense, if you were shorting, people, they would go, "Oh, now we have to call the SEC and have them look into this because it seems like something is going on." What about situations like this?
You are pointing to one of my favorite topics here, because whenever a short fund, meaning funds that speculate in a stock going down, whenever they come out with a report saying this company is completely crap, and then the stock drops, then people accuse them of market manipulation and all that stuff and say, oh, that is just because they are short. But whenever a big fund comes out, and that could be Vestas, it could be NOVO from yesterday that actually went up, also because, well, even because someone lowered the target. But the fact that many of these analysts just come out saying, oh, we are raising the target, and then the stock goes up, meaning that there is ample opportunity for manipulating markets here. But no one cares as long as the stock goes up, even though it's just as bad.
And we are not saying that the market was manipulated yesterday, neither for NOVO, because they also took a little jump yesterday, and it's continuing today, 2.6% up as we speak. And that was HSBC that came out and said, we expect it can do more than where it is right now. Hans Henrik, same story?
Yes, I think so. Definitely. The thing is that we have looked at NOVO for a number of times, and it is not a bad company. We know that they have got more competitors. There are some different things that they're struggling with, the entire board, the management of the company. So we have been in it very, very shortly. Lost a few percentage points on it. I can't even recall, somewhere here. But otherwise, we have not been in it for a very long time. And until it really starts a good uptrend, we wouldn't buy it. But that doesn't mean that people don't buy it. And when someone comes out with a recommendation, ups a target or whatever, people tend to buy into it.
And as we can see, our indicators below in your screen are red, double red, both of them.
Oh, yeah. As long as they are double red here, we normally don't want to touch it at all.
And that's why it's called a 3-point playbook, because we have 3 different steps that we need to go through. The last one is, of course, timing. Quality is, of course, in there. And then, of course, the expectations, we're looking into them as well. Let's switch over. It's Thursday, and that means that we are doing the Thursday Tech. The article is up on the platform already. Is that right, Liam? We are up with the, And then we kind of give you a sneak peek here in the show so you can go and read more about it. I know that you're not out of memory. You remember everything. You have a very, compared to how many Guinness you've drank during your life, you have a very fine memory. But according to me, we're talking memory again today because it's become awfully expensive. How come?
Yeah, it has. Nintendo came out this week and said the price of the memory they're buying is 41% more than they were this time last year. And I put this out last week, I think it was, that memory prices are shooting through the roof. What's happening is the AI data centers are requiring something called high bandwidth memory, which is like the normal memory, but it's on steroids. And they're requiring a huge amount of it. You can make sort of 6 times more normal memory than you can high bandwidth memory in the chip factories in Korea, in the US, and places like that. So that because they can demand a higher price for this stuff, everyone's switching their fabricators to doing the high bandwidth stuff. You can't get any memory for your computer without paying a huge amount, and that's what's happening with Nintendo's new consoles. That's happening with PCs. So I've sort of gone over what's going to be the impact on Apple, Samsung, Dell, SMCI, companies like that actually provide the kit that has memory in it. Their prices are going to have to go up, or their margins are going to get squeezed, and either way they're not going to make as much money.
And one of the things that you also take up, and we talked about a little bit on the show earlier in the week, was SK Hynix that might go on the American Stock Exchange, and that's going to give it a bump.
It should do, theoretically. So SK Hynix is one of the top 3 global memory manufacturers, so they're getting the benefit on the other end. These are the guys that are actually switching all their fabrication processes across to the high bandwidth memory. You can see here on our playbook page, they're having a massive increase in earnings per share coming, so that's actual profits, and they're actually quite well priced at 0.13 of a peg, so they're a great company. If we look at the valuations chart, now, Micron, who's the equivalent in the US, well, one of the other big 3, is trading at a PE ratio of 35 compared to around 12. I think it's 11.25 at the moment for these guys. So at the moment, we can see a 70% potential upside in the stock. If this just doubles because it lists on the American Stock Exchange, you suddenly have a massive increase there. So that's what we're keeping an eye on. So an IPO should be pretty good, depending on what the price is. So we rarely get into the IPO when it happens. We let everything happen, and then we'll ascertain where the price is going after that.
Yeah, we'll get elephants out of the room. Listen, guys, we had an email. I'll take it up. It's from Louise, who writes, "Hey guys, what do you think about Meta? The metaverse has been pretty much been put on hold. But where do you see it in the future, and how far would you let it slide before you would sell?" Louisa writes, her entry is 629, and then she thanks for the program and all your hard working on educating people. I'm a beginner, but learning so much from you guys. I hope you can take a compliment without getting it to your head. So
she talked to me, not you, Hans. So,
no, I know.
Yeah.
Can we bring up Meta for Louise and have a look?
Meta looks good. I know why Louise did it, because she was one of the few people that chose it on the poll this week as well. So, and I think I talked about it this week, saying that it was possibly my favourite. So, if you look at it, the earnings are going to be going down next year and then going back up again the following year. That's according to the analysts. So that's for the end of this year. So I think they have a December year end from memory. So next year we're starting to look at these earnings. The company looks okay. It hasn't made a profit last year. The revenues are going up, and that's where I see the strength in these guys. They've actually been beaten up quite a lot. If we look at the valuations chart, we can see that they peaked back in September and they've dropped down quite a lot. So there's good potential there. Has the company become sort of 15-20% less valuable in the time? Possibly not. It's got the best advertising money coming out of the system, apart from Google. They're in a very, very strong position. They're developing their own AI. They're trying to chase that at the moment. They came out yesterday saying it was going to be chargeable, or potentially chargeable. They wouldn't say no to that, as long as they can get the AI side back and running. But what they're using AI at the moment is to actually turbocharge their ad capabilities. So suddenly people are finding better responses on their ads because of the AI that Facebook are using. And that should translate into results going forward. So I like it.
And of course, we're not going to tell Louisa, we can't tell Louisa if she should hang on to it or shouldn't in that sense. But her entry level is 629, which means that she's in the green as it is right now. the analytics or the guys with all the secret knowledge that we don't have say that it's going to go up over the next 2 years, a little down next year. Should she hang on for it in the long run?
If you're into it, I mean, at the moment, from our playbook point of view, it's below the 50-day moving average. It's below the 200. It needs to go above that and then break back down and then jump up. That gives us that floor to the share price. That's when we would go in. So slightly early for us. If you're in it now, it depends on your investing timeline. So it's impossible to answer because everyone is different.
Okay. One thing for sure, Hans-Henrik, we're going to come to you now. You've been quiet for such a long time. That's really impressive on its own.
It's hard.
I know it's hard, but let me serve you up a crash in that sense. That CLAS OHLSON in Sweden, AB over there, went down by 15.8% yesterday, and it's not bouncing up again. No trampoline for them. What went on over there in Sweden?
Yeah, well, there were some downgrade in their earnings and their guidance overall, but it's actually a really good case. First of all, as we can see here, I won't go in depth with the playbook, but just our value chart. That for a long time, these have been the areas where CLAS OHLSON were considered cheap or expensive. And it was at a very expensive level, which means that it takes less to make investors sell out. It is priced for perfection. What happened yesterday, if you see here, we have right now, it looks like a good case from 1.4 to 52%. But what happened yesterday was that the expectations down here to the growth in earnings went down from around 7% growth next year to around 3%. That means that when stuff like that happens, people normally downgrade how large a PE they're willing to pay for the stock because now it's more risky. If that happens, the entire case shifts up here. Before there was a plus 1.4% in bear case, now there's a minus 21%. So now all of a sudden, with this shift in expectations next year and a bit less risk-taking among investors, the entire case shifts downwards and is not that interesting. But that is the mechanism that we are analyzing every day.
And this is one of the stocks that I know that we keep an eye on, especially after a drop like this, to see if it can stabilize and see if it can get back into the trend. And
we made some good money on it when we were in it, actually. We were following the trend, and then we went out when we got our sell signal.
And that's how you use the 3-point playbook. And how you use your glasses is no doubt when you're Irish, you will put something in your glass from this company. Liam, Guinness is opening a pub in London.
I know, I'm moving next door to it.
But I would say it's not enough to move a stock, or is it?
It's difficult. I mean, it's a good stock. In fact, I'm in the wrong DGE. So the stock itself is a high quality stock, always has been. The analysts say it's going up in earnings for next year. We can see the PEG ratio is at 0.21. The quality score is 82. So the first three things we always look at from the playbook perspective is great. The returns on equity and capital employed and invested capital are not particularly great. They're going in the wrong direction, which isn't particularly good. From a valuation point of view, they've got some upside, 23% on the worst case scenario that we've come up with, and these lines aren't even close to matching. Sort of, we normally try and make sure that this is up here and this is down here, and we've got some sort of trend, but they just look ridiculous. The real problem here is this. It's been in a downtrend for so long. I think it's forgotten how to go back up again. So we see that quite a lot. So it's quality stock until we get greens in the MTI and this starts meaningfully going up above the averages. We're not interested, unfortunately.
Sounds like a very flat beer you're serving up there. I'm sorry to hear that. I'll give you something a little more bubbly in that sense. That number of the day we talked about in the beginning of the show, $2.8 billion. And it's I don't think it's going to cool you down because depending on how you use it, in that sense that it's the company called OnlyFans. And I'm not going to explain too much about it. Say if you don't know it, don't worry. They don't sell fans, but they cater to fans in that sense that they are spending a lot of money. Americans are spending $240 million a month on OnlyFans. It translates into a lot of money every day. As a matter of fact, it's $91 per second Americans spend on OnlyFans. Atlanta is the biggest spending city for OnlyFans. In that sense, they spend about $500,000 in Atlanta. We also have numbers from internationally. Where are you living, Liam? No. See, it's Helsinki that's number one on the international side of things for OnlyFans. Zurich is number two. Frankfurt, Tel Aviv, and Milan are the top five. So, well.
Interesting thing is that they are the company in the world that have the largest profit per employee.
Yeah.
True. They make a bundle of money. We're in the wrong industry.
Yeah.
Should we get an OnlyFans page?
I think we should stick to what we do best.
I think the monkey behind Liam will do better than us, I'm sorry to say. So let's not go there. But we're coming towards the end of the show. This is the show in English. We will have that every Tuesday and Thursday at 1 o'clock Central European time. And then we will have our Danish show every day at noon, 12 o'clock. That's when Hans Henrik and I are going to be alone on the ship until Liam gets to talk Danish. Then he will be let in as well on that show.
That's
yeah, that's more Guinness before you do that. But Liam, I have one question to you before we go on. I know that we're sort of going a little long on time here. Broadcom comes with numbers today. Are we going to see sort of an Adobe moment, or are we going to see an Oracle moment?
It's a really difficult one. They're a great company, really high quality. They're making all the chips that people want at the moment, but they're priced for perfection. I think unless they hit it out the park, they could see a bit of an Adobe moment.
Ooh, let's see how the numbers are. We'll definitely be talking about that tomorrow, and that's going to be in Danish. Hans Henrik and I are going to be back at that time and talking also, of course, the Friday face-off. We can tell already now, Hans Henrik, that we do have a couple of Danish bank stocks lined up for you. Jyske Bank and Danske Bank are going to go head-to-head. It's all on the show tomorrow at noon Danish time, Central European time. Liam, we'll see you on Tuesday. Go check his Thursday Tech out. It's available on our social media, on our platform, that is. And Hans Henrik and I will be back tomorrow. For now, happy investing. See you guys.